Hey friends, welcome back to the Educated Homebuyer Podcast. Today's episode is going to look and feel a little different, and for a very good reason. Last week, we hosted a live webinar called the Educated Homebuyer's Blueprint, and because the feedback was incredible and we already have 5 attendees who have closed on their homes and others under contract, we knew we had to bring it to the full podcast and YouTube audience.
If you're wondering when to buy, how much you can really afford, how to use your tax refund wisely, or if you're just overwhelmed by the process, this episode was made for you. Inside, we break down the entire home buying process into 3 simple strategic steps. First, we go through how to know your why. Why are you buying a home? Know your numbers, and then knowing your market so you can buy right, borrow smart, and build wealth without the panic, the guesswork, or the FOMO. We also introduce some powerful new tools and free bonuses, including our brand new credit score jumpstart guide, a complete A to Z homebuyer checklist, and a curated network of top-tier realtors across the country to help you win locally in your market.
And one of the cool things is you'll hear stories of real listeners just like you who tuned into our January webinar, took action, and are now homeowners just 90 days later. So if you want access to the bonuses, just listen through. We'll show you exactly how to request them at the end of the episode. And finally, if this episode hits home and you think you're ready to take the next step, our call to action is really, really simple. Just head over to the educatedhomebuyer.com/blueprint, which will be in the description below, and schedule a consult with Josh and the team to get personally pre-approved. No pressure, just honest expert guidance to help you build a clear plan. So let's dive into the replay of the live webinar and help you become the educated homebuyer. Welcome to the Educated Homebuyer's Blueprint. This is our tax refund edition. This is your complete guide to buying right, borrowing smart, and building wealth in 2025. For those of you who do not know us, my name is Jeb Smith. I am a 20-plus year real estate and mortgage veteran. Josh, are we saying those?
You have to claim it. You were one once. So.
I was one once, but the goal here, again, is all about education and guiding you through the process. Again, 20 years in the business, 120,000 plus subscribers on YouTube, all about educating and creating content around becoming basically the educated home buyer. And Josh, who are you?
Well, here's the funny part. Why we're having to go through this tonight, Jeb, which we don't normally and typically do, is the last few times we've done this, we've done it just for the podcast audience, members of your audience, members of our list, people that know who the heck we are. So we went a little bit wider with the marketing for this and have more people here who don't necessarily know who the two of us are. So you did a great job of explaining here. I am not as vain as Jeb, so I don't come up with vague 20-plus year numbers. I've been doing this for 29 years. Started doing home loans in 1995, late 1995 after I graduated from college. Came from a family of mortgage processors, realtors, real estate investors. So I'm a one-trick pony, Jeb. This is all I know. I am a certified mortgage consultant, a certified liability advisor, lots of fancy words that say I read too much and study too much and pass silly tests that say that you actually know a few things about this. But in the context of what we do here with the podcast, of what we do with the live show, of what we do here, it's truly just educating and empowering people. And we feel like we've distilled this process down to some relatively simple, easy to follow steps where you can get on board and come out with a predictable outcome versus having to be stressed, worried, concerned. And that's what we're going to go through for you tonight.
Yeah, and if you're here, you want to become the educated home buyer. So that is really, the goal here is that you've taken the first step to want to learn the process. Again, never too early to start this, whether you're 3 months, 6 months, 9 months out. The earlier you learn this, the better you can get at perfecting what it looks like for you, and realizing it when the right time is, and ultimately help you, set a plan, put it to action, and accomplish that goal. So together we co-host the Educated Homebuyer podcast. It's on YouTube. If you haven't seen it, you can definitely go check it out. There's actually a podcast on Spotify, Apple, all of those places as well. 167 episodes or so, Josh, of weekly content, really distilling this process in great detail. But today is more of a surface level of the process, right? We're going to take you through each stage, what it looks like, and then we're going to come up and answer your questions. And with that, you'll take home some great stuff at the end of this as well, to help with the process. So, Josh, who are these people?
So that's Jim and Cheryl. Probably listened to more episodes of the podcast than we know. When I first came across him, he blew my mind by telling me he had listened to 60 episodes of the podcast. They reached out to me after he had already listened to about 60 episodes of the podcast, but we had a very good initial conversation. He told me where he was at, what his plan was. Said, I'm going to call you back in about 2 to 4 weeks. About 2 weeks later, said, okay, ready to jump in, get pre-approved. Got him pre-approved. They were up in NorCal, so Jeb couldn't help them as a realtor, but got him connected with an awesome team of realtors up there that Jeb works with, that I've now had the pleasure of working with several times, and successfully became a homeowner. Got their dream home, got in for the new year here, and very excited to be homeowners. So we'd like to put this in there. Everything related to buying your first house feels like an overwhelming amount of information, and these guys lay it out in the most clear way possible. So that was from the first round go around in January, when we wanted to share this with everyone. Well, we now have had 4 success stories from the folks who saw the original webinar in January and are now homeowners. So we did that January 28th. So we are less than 120 days, like 90, 100 days out from that. So this is Becca. Becca just closed last week in the state of Maryland. And I thought her story was pretty applicable. So if you're looking at this, what can you expect to get out of this? Starting to listen to Josh and Jeb's podcast to learn about the home buying process. The more I listened, the more I learned and knew that these were the right folks to help me. So we were able to get her followed every one of these steps in the process. She got super lucky. The very first home she liked, fell in love with. She wasn't the first offer accepted, but she was the second offer accepted on it, and literally just closed last week. And that is a picture of Becca there at closing. So hopefully some of you who are listening and joining in with us today are going to be the next success story for when we do this in another 90 days or so.
Yeah, we hope to be able to put you guys on here. So just to clarify, the goal. What's the goal for tonight? What's the plan? What are you going to get out of this? So we're going to talk about everything from, can I qualify? Is my credit good enough? Do I have enough money saved? Is my work history okay? Will people take advantage of me? Is this a bad time to buy? Am I getting a good rate? Who is going to pay my realtor? Is it too soon to start the process? And where do I even start? So these are a list of questions that came up from the audience, right? That's where these questions come from. And that's essentially what we want to clarify in tonight's episode. We want you to walk away with confidence, knowing that you have the information, that you are educated enough to go through this process and ultimately become, again, one of the success stories. So Josh, the real estate blueprint.
Yeah. So with that, I think we actually jumped over one there, Jeb. So we have, for those of you that are here tonight, a few exclusive resources, some tools that we literally just put together. This credit score jumpstart is something that I've been working on over the last month or so, because nearly every person I look at, the person that comes through with an 800 credit score, yeah, there's nothing there they need to do. But most folks with a 720, I see a couple things they could do. They could easily have a 760 or a 780 credit score. Those folks with a 660 could be a 700, and it makes a big difference. That book breaks it down, the exact steps you can do to optimize, maximize your credit to get the best terms possible for you. We also, basically the entire blueprint that we have here, we have a checklist put together, the A to Z, nothing left to chance homebuyer checklist, so you can know everything you can and should be doing through the process to maximize your odds of success. We're putting the finishing touches on the complete guide to hiring the right realtor for you, including in there, if you want us to do the heavy lifting for you. Jeb has an amazing network of realtors throughout the country. Connected. Becca actually had 2 really good realtors to choose from, but had a great one in Maryland there for her to choose from. We talked about Jim and Cheryl in Sacramento. It really does not matter where you are in the country. I've had the pleasure of working with many of the folks in Jeb's network. If we can get you connected with them, you're going to get great service and potentially a little bit of a credit there for you at closing. So we'll go through that as we get a little bit further into this. But Jeb, talk about the blueprint and the 3 steps.
So, I mean, ultimately, when it comes to buying a house, people are confused on why they're doing it sometimes, what the reason behind it is. And I think, one of our goals here is to help you know your why. Like, we want you to, again, clarify your goals, expectations. We want you to go into the process knowing that this is the right move for you, that you're doing it for the right reasons. I tell people all the time, having cold feet is part of the process. Like, getting into the process is a big deal. Like, you're buying a house, there's down payment involved, there's money coming out of your account, it's going into another account. somewhat disappearing when you look at your checking account, and it's scary. And so if you know why you're doing it, it's a lot easier to always come back to that and go, yes, I'm making the right decision. So we're going to discuss that. We're going to talk about knowing your numbers, your budget, pre-approval. Josh is going to go into detail about this pre-approval. We're going to talk about why having a budget in this process is really, really important. And then we're going to talk about knowing your area and your market and whether or not it actually makes sense to buy a home right now. Some markets of the country, it might be worth waiting a little bit to pull that trigger, whereas others area waiting, you're probably going to get left behind a little bit just because of that supply demand imbalance. And lastly, we're going to talk about building your A team, how to search for the right mortgage realtor. Mortgage realtor? That's a combination of two. Mortgage expert, we're going to help you find the right realtor, and ultimately the support team to go along with that process.
So we already gave you the insights there to Jim and Cheryl, but that's the whole details of their journey. He did a great job of sharing what that looked like. And again, it really mirrors what we're going through today.
But I think the goal here, guys, for those listening is to make you Jim and Cheryl, to make you one of the success stories where you come away feeling like you knew the process, you knew what to expect, and there was nothing hidden along the road. That's really it.
Educated, confident, empowered home buyers and eventually home owners. Because so many people, Jeb, I have the misfortune every week of having people reach out, listeners to the podcast, and they're in a panic. They're a week in, they're 2 weeks in, they're a week away from closing, and they don't have the right team around them. They didn't follow the right process, and they have no idea what they're doing, and they're in a panic. So hopefully we're going to help you avoid that. So this is the big question that everyone comes with. Should I buy a home? And let's ask if that is the right question. So let's look here over the past 5 decades. The homeownership rate in the United States at the low end has been about 63%, and at the high end is about 69%. 69% was not a good number. There are not that many Americans who can and should own a home at any given time. So you saw that number drop precipitously from 2007 down to about 2012. And we're right in the middle of that range right now, about 65, 66%. So at any given time, 65% of Americans choose to be homeowners, or 65% of American households choose to be homeowners. That is the general preference, and that's been consistent over time. So most people, given their choice, would rather own a home than rent. So should you buy a home? What does this look like in terms of monetary outcomes? The net worth of a homeowner, and the most recent numbers from the Census Bureau survey of consumer finance is $396,000, so just shy of $400,000, relative to that of renters, $10,000, $10,400. So about 40 times greater net worth. So some important things to remember here. Correlation does not equal causation. If you are a financial misfit and you suddenly buy a home, you are actually likely to lose that home one way or the other versus becoming magically wealthy. So what happens is the type of people who become homeowners, they're more educated, they have better jobs, they earn more money, they have better credit, they're more disciplined. So all of those things, becoming the type of person who can successfully own a home will help you build this level of wealth over the long haul. So it's important to remember that homeownership is not magic. It doesn't make you become a wealthier person. There's some factors there over time. You're fixing your housing cost. And today, owning a home with a smaller minimum down payment may be more expensive than renting. So you're like, hey, it's actually more expensive in the short run. But within 10 years, with 3% rent inflation, you will quickly see that someone with a 30-year fixed mortgage is going to have a lower housing cost. So when we look at the average homeowner cost of owner, the average housing cost of owners versus renters, it's actually about half. And that's because 40% of Americans own their homes free and clear. Of the 60% that have them, depending on whose numbers you look at, they only owe about 60 or 70% of what that home is worth. And about 70% of them have mortgages at less than 4% interest rate, thanks to many of the things that's happened over the last few years. So you're fixing your housing cost. A component of that, with a fully amortizing loan, you're making a principal payment, so you are paying that down, and you are getting leverage depreciation. So with 3%, 5%, 10% down, you're controlling the entire asset. So you buy a $400,000 house with 3% down, your $12,000, if that home goes up 3%, goes up $12,000. You had 100% return on your $12,000 invested. It's a little bit of an oversimplification, but those are some of the things that if you are one of those 65% of Americans who would prefer to own their home, those are the things that over the long haul, a lifetime of home ownership will do for you to build your wealth. So again, should you buy a home? The question shouldn't be, should I buy a home? It should be, when? Is now the right time for me to buy a home? Or should I be waiting and looking at some point in the future to become a homeowner? So with that, Jeb, talk to us about, how does someone know if they're ready to be a successful homeowner?
Yeah, I mean, one of the things that we often talk about is it being the right time in your life. And for some people, when I say that, they instantly, it clicks. Other people are like, what are you talking about? The right time in my life? How do I know it's the right time in my life? And so it really comes down to it being, first off, a personal decision versus one of FOMO or one of somebody telling you that you need to do it, some sort of outward pressure. It's about you making the decision because you're ready to build a foundation. When I say being ready, I often think of myself, right? My wife and I rented our house, or renting an apartment rather, as we first got married, and we were getting ready. She was pregnant, and we were looking at the spot that we were in, and it was 2 bedrooms, and it was upstairs unit, not a lot of parking, not really a lot of space for the kid to run around. At that point, I knew that something needed to change. We could either go continue to rent something else, or it was the time in my life where we start building that foundation together and knowing that we were going to have more kids, needing a bigger space and all of that. So that for me is what I think about when it's the right time in my life. Now, for some other people, it might not be about kids or about wife or a spouse or a partner or whatever. It could be something entirely different, but it's really confirming your readiness in that process, which basically means that you have some sort of financial stability, right? So you are in a career where, you have an idea of what the future holds. You have, and that goes along with job stability, income stability, but also relationship stability, right? You're not newly meeting someone. You guys are going to move in together and decide, hey, we really like each other. We've only known each other a couple of weeks. Let's go buy a house together. Probably not the smartest move. Also, do you have credit? Do you have good credit? One thing I tell Josh all the time when we're having this conversation is, or we talk about often is, if you don't have good credit, and when I say good credit, I'm talking high 6s plus, it's probably worth waiting until you improve that credit score to go buy a house in many cases, because it's going to be you're just going to put yourself in a much better position financially. You're going to be able to be approved for more. You're going to get a better interest rate, which is going to lead to a lower monthly payment. So all of those things matter, on top of probably the most important one, Josh, especially over the last couple of years, is having that longer term time horizon. I think you should be buying a house right now with the expectation that you're going to be in that house for more than 5 years. 7 to 10 is probably ideal. And when you're buying that house and you're looking at what you can afford, you're thinking of, hey, we're going to have 3 kids in the next 3 years. We need to factor that into the property that we're going to buy, so that in 2 to 3 years, you're not thinking, okay, we've already outgrown this place, we have to do something different. It's setting a plan and following it when it comes to deciding whether or not you're ready to become a homeowner.
So that's aggressive breeding, Jeb. 3 kids in 3 years.
I mean,
most women in this day and age are not on board with that. You're on your own, bud.
Well, yeah, I was 3 in 6 years. So,
and that, I thought that was aggressive. I have 0 in 52 years. So that's a little different philosophy. Continuing on with that, just clarifying your goals and your readiness, your budget. So most people don't have a budget. A budget is really, really important. I say this as someone who doesn't regularly budget, but anytime we're going to make a major purchase, if we're going to buy a piece of real estate, maybe if you're going to buy a new car, you probably need to go back and look at the last 90 days of your income and expense history, know what shows up on the credit report, know the stuff that shows up on the bank statement that doesn't show up on the credit report, the 14 streaming subscriptions, all of that stuff, so that you truly know how much comes in, how much goes out, and do I have a surplus every month? Can I afford this? Because because what I always get as a mortgage professional is, what are you looking for in a housing payment? Well, I just need you to tell me what I can afford. Say, I cannot tell you what you can afford. I can tell you what the guidelines tell you can qualify for. So I think a recipe for disaster is going with what the lender tells you qualify for versus what you confidently, knowingly say you can afford. So how do we determine that? Know your personal KPIs. What's my qualifying income? Meaning not what did I make last month, but what is the underwriter going to use? What can we average for any of my variable income, bonuses, commissions, overtime? What does that look like over the last couple of years? So we get a really solid, dependable number. What are my monthly debts? We talked about it, not just the stuff that shows up on your credit, but the sort of the voluntary things that you choose to spend your money on every month. Some people are really frugal. Some people spend a ton of money. So people with the same amounts of income can really have a big differential between what the two of them can comfortably afford based off of how they spend their money. So usable savings. How much have I been able to accumulate? Someone who saved up $100,000 is probably going to be able to comfortably afford more of a home than someone who has $12,000. They both may be able to get into a home, but how that looks is going to be different. And Jeb already talked about the credit score. This is truly the number one factor here. People reach out all the time. They see Jeb's video that says, hey, FHA 580 credit score. VA loans have no minimum credit score. These things are true. What you can do and what you should do are often two different things. That credit score is your report card on your financial readiness. So median credit score in the US is over 730, 740 right now. So that's a good place to target. You don't have to have an 800 credit score. You don't have to have perfect credit. If you're young, it takes time to build that credit score. But high 600s would be ideal to get you both good terms and show that you're building that credit record of being able to pay. So your loan selection. So what loan program am I looking at? That's going to tell me what my maximum purchase price is. And FHA is going to let you buy more home than you can with the conventional generally. What is my cash to close and what is my total PITIA? So principal, interest, taxes, insurance, HOA, everything that goes into that monthly payment.
And that's going to put us into talking about goals and your readiness to buy. Now, you're going to get a quote here on a moment about goals and direction. Home buying process, or you're considering buying this, that not only do you set some goals, you kind of lay out what that looks like. It's helpful looking out a year, 2, 3 years down the road, writing this stuff down. Like anything you do, goals often pull you to where your mind is focusing and thinking about. So what I like to do is tell people, hey, are you on the same page with your spouse? I can't tell you how often I talk to people and they're on two different pages entirely. And one is only interested in single family homes. The other is open to townhomes and condos. One wants a yard, the other doesn't. One's thinking about the dog, the other one's thinking about the kids. It's all about, not only knowing it's the right time in your life, but also knowing that, you and whoever you're buying with are ready to make this purchase together, and that your goals and your values align with that. Location to me is the most important thing when it comes to buying a home. I think if you sacrifice on location, and when truly thinking about location, you'll end up regretting the purchase. Now, oftentimes people can't afford to be true, in the absolute best location, right? Josh and I would love to live in Beverly Hills or on Malibu staring over the ocean. The reality is that's not possible. So I'm not talking about that. But what I am talking about is, when you're looking at where you work, where you spend your time, where your kids go to school or where you want them to go to school, focusing on that sort of location versus just a county, versus just an area. I can't tell you how many times I talk to people and they say, hey, I just want to live in Orange County. And I'm like, okay, well, Orange County is really big. Where do you work? Well, I work in Long Beach. Okay, so that's basically not even LA in Orange County. That's North Orange County, all right on the border. But we're open to going all the way down to San Clemente. And I'm like, that's crazy. That's an hour plus drive every single day without traffic to get to that drive. So knowing location, knowing the area that you want to be in is super important. And then going into things like bedroom and bathroom count. We talked about that. Knowing where you plan to be in a couple of years. If you plan on having kids, if your mom and dad or visitors often come with you, kind of, building that into the property that you want to purchase. Now, sometimes you can't get the 4-bedroom. Your budget doesn't allow the 4-bedroom, but that means, okay, the 3-bedroom might work, but don't sacrifice and go with a 2-bedroom because the 2-bedroom's less expensive and we're not ready for the 3rd bedroom yet. That's understandable. But what I don't want people to do is just think about today. I want them to think about the future. I want them to think about resale value. And now you're not going to be buying your home and selling it immediately, but the reality is you should always be thinking a little bit further ahead because that stuff impacts you at some point in the future. And, homes with, less than 2 bedrooms often are impacted by buyer demand, by the market just in general. So you want to be thinking about those things. One thing I often tell people too is don't focus so much on square footage. Like get an idea of the bedroom and bathroom count that you want, and then start going out and looking at properties. You can have 2 properties that are completely different in square footage, and the smaller one feels larger than the bigger one because of how that home is laid out. So I don't like the whole square footage metric when deciding, the perfect house for you. But it's one of those things that often comes up in conversation. And a lot of this is going to be addressed, Josh, and we're going to talk about it when we're doing a home buyer questionnaire. But we're going to talk about features and amenities you want in the property, wants versus must-haves. A lot of people want a garage. They don't necessarily have to have a garage in many cases. So it's, what do you need versus what do you absolutely have to have? And then ultimately, which agent to work with. And we're going to take you through that process of how to basically get your rock star agent, whether it's your mortgage agent, whether it's your real estate agent. We're going to walk you through what to look for so that you ultimately, have the information necessary to be able to find that person.
Well, let's look at 2 different angles of the same advice. It's going to tell you which type of person you are. So this is Stephen Covey, famous author, speaker, author of the 7 Habits of Highly Effective People. Well, habit number 2 is begin with the end in mind. Don't start anything without knowing what success looks like. So you may not be a business book reader. You may like Disney movies. So this is from Alice in Wonderland. And she says, would you tell me, please, which way I ought to go from here? And the Cheshire Cat says, that depends a good deal on where you want to go. I don't much care where, said Alice. And it doesn't matter which way you go. So the same thing here. What Jeb is saying is, don't show up and say, I want a house. Well, cool. Which house? I don't know, any house. Well, we could end up in a terrible neighborhood, the absolute wrong home for you that makes you miserable. So know what that success looks like to you. And for me, that starts with the numbers. The numbers are the hard, cold facts versus the emotions of it. But when we're looking at numbers, what in the world are we talking about? Knowing your numbers is the outcome of a rock solid pre-approval process. Pre-approval versus pre-qualification. Pre-qualification, you and I, or another lender, because you wouldn't do this with me, the initial conversation, we're going to go through some numbers. How much do you make? What do you owe? What do those credit scores look like? And we're going to have a ballpark idea. Hey, is this worth pursuing? Do you look like someone who maybe should own a home? But we would never leave it there. The pre-approval is the next step where we go, everything looks good. Looks like we can accomplish your goals. We want to confirm everything. So we want to understand 3 key numbers. What is the maximum purchase price? For some people, they do want to know literally what is the top dollar number I can get you approved for? And they're going to look at the monthly payment and go, okay, we're comfortable with that. And if so, that's great. Other people go, this is insane. We have one of the attendees of the January webinar who's out making offers right now. They probably qualify for a $2.5 million home. I run through the numbers. He's like, oh no, nothing over like 1.2 with a big down payment. So everyone is different. This number is what can we get you qualified for and what do you feel like you can afford? The next piece of that is what is that monthly payment? So now we know I can buy up to $400,000. I can buy up to $600,000. I can buy like them up to $2.5 million. If I buy at any of those levels, what does my monthly payment look like? Everything all in that I know that is going to recur that I need to pay at the beginning of every month, or the taxes and insurance I'm going to repay annually. So principal and interest, what's my mortgage payment? Taxes, what are my property taxes going to be? Insurance, how much is that going to cost? It's a big factor here recently. It's been changing, increasing, depending on where you're at and the risk levels of that home, you need to get that out of the way very early in the process so you know that that's not a negative surprise towards the end. And then association dues, any special assessments, anything else there that comes into play. The last piece that we want to look at there is the cash needed at closing. I am shocked how many people that I talk to say, I've been pre-approved. Cool. Well, what have you been pre-approved for? $450. Okay. You know what the interest rate was? I got no idea what the interest rate was. Okay. Well, how much money do you have to work with? I don't have any money. You don't have any money, but you were pre-approved for $450,000. So how was that going to work? I don't know. They said I could do FHA. Well, FHA requires 3.5% down and even needs to come from you or a gift. So those are the things that we want to talk about. What is the down payment? What are closing costs in your area? It's going to be different in Texas than it is in Florida, than it is in Virginia, than it is in California, than it is in Washington, than it is in North Dakota. So we have to go through what's my down payment, what's my closing costs, and then prepaid items. This is a lot of times people don't think in terms of this. The prepaid items are some prepaid interest that's due at closing, prepaid taxes, prepaid homeowners insurance. You're going to pay your first year's homeowner insurance premium. And then most of our first time buyers putting less than 10% down, they're going to have an impound account. So we have to establish that with a little bit of taxes and insurance. So those are the key and most important things that you need to know when you come through that pre-approval experience. So going back to Jim and Cheryl, quote from them, Josh got us pre-approved. We knew we could get into the homes we were looking at. So first of all, they got that clarity. Those are the homes that we want, that feel like we need, that we're going to be happy with. And now they know that numbers wise, they can do it. The process is only scary if you don't know what to expect and don't have reliable people to work with. So how do we get you there? What does that pre-approval process look like? Most importantly, the stress-free pre-approval process look like. So from that end, the first step is you're going to do an online loan application. I know some people that still will do it over the phone with you. Some people will send you a piece of paper, but the secure way and the best and easiest way is to do it with an app, a portal where you go through, and this is mainly your demographic information. Where have I lived and worked for the last 2 years? What's my social security number? What's my date of birth? How many kids do I have? That type of stuff. Things that only you know that we're not going to be able to pick up from the documentation. So from there, we need the supporting documentation so that we know everything you put on that application can be verified and is accurate. Not that you're doing anything intentionally, you're not misleading us, but people rarely know what they actually make. Most people don't even know the dates of employment of their most recent job, especially if they've been there for a long time. So we're going to collect pay stubs for the last 30 days, W-2s for the last 1 to 2 years, depending on the loan program, and bank statements for the last 1 to 2 months, again, depending on the loan program, and then your valid government-issued photo ID. That's going to be pretty consistent for everyone unless you're self-employed and you don't pay yourself with payroll and W-2s. So you may have to come up with tax returns if you own other properties. Most of the folks here tonight, first-time buyers, you're not going to own rental property. But if you own rental property, you have dividend income, you're self-employed, you may have to provide 1 to 2 years of tax returns. Step 3 is my job. Now you've given me all of that documentation, myself or one of my team members has to go through and pre-underwrite that file. And we're going to go through and say, what is our level of certainty that they qualify for the program that they want and that we're not going to have questions or problems. If we have something that's in doubt, that file may go to underwriting and have a fully underwritten approval before you go out shopping for homes, just because there's some questions there. Again, I've done this for 30 years. I don't lose debates with underwriters because if I'm in question, I don't have certainty on the guideline and what you're able to do, I'm going to ask them ahead of time. So that's actually pretty rare. We don't often send files ahead for pre-underwriting before you go out and look at homes. But when you do, it can be appropriate. So that way you, again, stress-free, certainty, clarity, you know what you can do. The last step here, Jeb, is that loan option comparison. So we want to compare all the different loan programs. I'm never going to tell you, oh, you don't want to do FHA, you want to do conventional, or hey, FHA is the right loan program for you. We're going to show you that. We're going to show you those options side by side, different down payments, different point structures. So when we go through that, this is what it looks like. And it doesn't have to look like this. There's 100 different tools that lenders use to give you this, but we have a 3-loan comparison here. This is FHA versus a conventional 3% versus a conventional 5%. You can see the difference in interest rates between the loan programs. You can see the difference in mortgage insurance. You can see the way it's structured, and most importantly, the total payment and then the total cash to close. When we look at this, one of these loan programs is going to speak to you. So if we look at this, the number of cash to close on the low end is $25,000 all the way up to $35,000. So if you have 35,000 or 40,000 that you're willing to part with, you can look, and all of those are good options that are on the table. But one of them is going to speak to you, and you're going to go, that's the one that I want. So when we look at this, I like to reference, again, you may not be a business book person, but The Paradox of Choice by Barry Schwartz. He talks about why more is less. If I give you 23 different options and I give you different rate, point, fee structures, you're going to look at all of this. You're going to throw your hands up in the air and you're not going to do anything. It's going to paralyze you. So we want to start with those options. Once we dial in and we say, hey, we're going to go with the 3% down conventional. Now we can look at a 0 down versus a 1 point, or a 0 down versus a 2-1 buy down, all of those little different nuances. But we want to take these in a structured manner, one step at a time, so you know what that looks like. Then we're going to dig down into this. If you want to see the details, we're going to show you line by line where all of those closing costs go. First-time buyers don't generally know what is involved. And they're like, cool, I need 2% of my purchase price, but where does that all go? We're going to break it down for you and, again, help you to make that decision. We talked about the prepaid items, prepaid interest, taxes, insurance. This is where we go through it. It's going to be pretty consistent from loan to loan, so not a huge difference there or a deciding factor, but you still want to see it. You want to know what it is. You want to know where that money is going. So at that point, Jeb, we've got that rock solid pre-approval. We have the right loan program. We have the right point and fee structure. We know what we're doing. People say, well, hey, can I get my pre-approval letter? Let's say they're working with you, Jeb. I may give that buyer a pre-approval letter and give you a copy of it. But the issue is, let's say they're pre-approved for $700,000. What happens if they find a home for $620,000, $640,000, if it's something with an HOA? We generally like to give you a pre-approval letter that is customized to the offer that you and your agent are going to write. So we can certainly give you one up front in case. Sometimes listing agents are wanting to see that you're pre-approved before they even let you in to see a house. Sometimes your agent, before they get you out and looking at homes on the weekend, want to see that. We can absolutely give you that. But at this point, you are fully pre-approved and ready to go. Really, from this perspective, why don't you give me your thoughts and perspective on this, Jeb? When someone is looking at picking a mortgage pro, we have a questionnaire from your channel, from the podcast, that people fill out. And really, the only thing that people know how to ask is, I want the lowest rate. So the lowest rate can actually paradoxically be a recipe for disaster when you're trying to shop for a lender. But what are the important things that someone should be looking for when picking a mortgage pro?
A lot. Again, this is going to kind of go hand in hand with a lot of the real estate things that we're going to talk about. But first and foremost, knowledge and experience, having some expertise, right? Doesn't mean you can't be an expert, after being in the business a lesser time than you've been, Josh. 29 years you've been in the business. Somebody could still be an expert at 10 years. But there's something to be said about having an additional 19 years of experience, seeing more things. So I think experience is probably right up there in the top of it. Second thing, great terms, right? The best rate isn't necessarily the person you want to go with when looking at it, right? That we'll talk about the paradox of choice when shopping for lenders. Having too many lenders creates chaos, but you want to make sure you have the right lender on your side and somebody that gives you good terms. They don't have to be the absolute best terms out there in the market, because oftentimes the best terms out there in the market means, you're working with some sort of call center. You're not working with an expert. You're just a number on the board. You don't have access to be able to ask questions, somebody to call on the weekend, all of those things. And ultimately, for me as a real estate agent, I want that mortgage person to have communication. I want them to have communication with the buyer that I'm working with. I want them to have communication with me. I want them to have communication with the agent on the other side, so that we're all on the same page. At the end of the day, we're all a team, right? We're all have the same goal in mind. We sometimes have different clients in some regard. Me as a listing agent, maybe I'm helping the seller, and you might be helping the buyer. But at the end of the day, we all have the common goal of getting that deal closed. And that doesn't happen without communication, Josh. So, we get people wanting, what they think to be the best thing for them. And what I will tell you more often than not is all lenders are really, really close in rate and fees. That's not the separation most of the time in lenders. What's the separation is having the experience, having the communication, and being able to really tie that whole process together.
That communication piece, Jeb, we've opened 3 new purchases this week. All 3 of those, we don't always get to talk to the listing agent, but all 3 of those, one person double-ended it. The buyers went to them and she reached out to me. We had a great conversation. I know for a fact it helped put that together. Was I the deciding factor? No, but us being able to communicate and have that rapport definitely helped. The other 2 were a little back and forth. One we talked about, listing agent is a little edgy, a little difficult, but we were able to work through some things, get her a comfort level. She was willing to accept that offer. Another one that the agent just had some concerns about how the offer was written in terms of some of the bailouts for the borrower, and they wanted to know some certainty and some interest rates and those things. So it is really important to be able to put that together. I can tell you, if you shop 10 different lenders, we're going to be better than 9 of them, but I'm not going to be the cheapest, very rarely going to be the cheapest. I'm sure you could find 10 of them that I would be, but no one is going to be able to match all of that. And probably the most important part, we go back to that stress-free pre-approval, the stress-free process. We're about ready to transition to the real estate side of it. If you have done this right and you are working with the right mortgage professional, and I am not the only one in the country, but I am definitely in a small minority, less than 10% of people. If you've done it right, from here on, the mortgage is a non-event. The most common comment that I get is, that's it. That's all I have to do. It's easy. And you're like, that is 100% it. So let's look at this. So we talk about
Josh,
building.
before we do that, I want to go back to the whole paradox of choice, right? Talking to too many mortgage people, like going online, typing mortgage broker in and putting yourself on a list where 10 people, 20 people are going to call you is a nightmare for you, because what you're going to hear is a lot of different things. You're going to be so confused at the end of the day that you don't know which way is up and which way is down. And that's why I think it's really, really important. If you're going through the process, start with a trusted referral. Start with somebody that you know who has a good experience, has great Google reviews online, meets the things that we talked about here, and have that conversation. And then if you want to compare that person to someone else, by all means do that, because you should look at rates and fees from someone else just to make sure you're not, getting hosed and that you are getting a good deal. But what I will tell you is the more people you talk to because you don't believe, something here or this is better, or I'm looking for, it creates chaos. I can't tell you how many people call completely confused about everything. And then I hear Josh on the phone explaining the process, and it's almost that they're not even sure that Josh is even telling them the truth at this point because they've heard so many different things. So trust the process, start with a trusted referral. If you need that person, we can actually help guide you through that process as well. So use us as a resource.
So where we're going, that as you build your team, this is what people think of.
I thought that was Bon Jovi the first time we did
you
this,
thought it was
Josh.
Bon Jovi. That your secret was safe with me. You did not have to tell these folks.
I thought that guy was living on the edge right there.
That is John Bon Jovi. I'm still at a loss. I had forgotten about that, but it confuses me to this day. But there's the rock star. There's the realtor that gets all of the glory. They get to do the fun stuff, show you the houses, hand you the keys. This is your mortgage professional. We start with the mortgage professional, because again, that's the foundation. It's not that it's more important. Both of these are important, but there's no need to talk to a realtor until you have your numbers dialed in. Now your realtor has everything they need to do a great job for you.
Yeah. And what I will say is, you call me, I'm often putting you back in touch with a lender, right? I'm telling you, hey, listen, are you pre-approved? Have you had that conversation? Have you been through the process? Do you understand your numbers? Are you comfortable with this? Because without that, I can't do my job. I can't even really help you look at property because we don't know where you stand. So takes us back to Jim and Cheryl, Josh.
Yeah. So again, I thought this quote from their testimony here was really instructive. We found that finding a solid realtor is tough if you don't already know someone, but we were super impressed with Jeb's network. My advice is to get as educated as you can, which you guys are doing here tonight. Find experienced, reliable people to support you. Our agent and lender happened to be me. We're instrumental in getting us to the finish line. Again, when you have the right team, the questions are always a text, or the answers to your questions are always just a text or a phone call away. And if we don't have them, we can get them. We can do the research for you. So again, Jeb, building out that team from the real estate side, what does that look like?
Looks a lot like we talked about with the mortgage piece, in that you want somebody that has experience. You want an agent that's been through multiple markets, in my opinion, right? I would say a large majority of the agents out there at the moment, started the business probably within the last 5 to 6 years. And doesn't mean they're not good agents. It just means that they don't have the experience to negotiate, to know how to write offers in a changing market. We've been in essentially the same market from 2020 up until, better part of now. Yeah, it has changed since then, but it still hasn't really changed. And we're starting to see some of the signs on the wall now, with properties sitting a little bit longer, days on the market going up, price reductions. Knowing how to negotiate this stuff is part of what you hire an agent to do. You want them to have the experience and the expertise to be able to go through that process. So you want an agent that can do that. And that goes hand in hand with knowing someone that, or finding someone that knows your local market, right? You want to be working with an agent as a buyer who understands your market, who has helped buyers in your market before. I said this last time. I know agents here, Josh, that work here full time, but they sell property in other states occasionally. And I'm like, how are you knowledgeable enough to be able to take somebody and sell them a property in a market like Phoenix that's changing way more crazy than we are here in Southern California? So having somebody that understands the market, having someone that you can trust, that isn't just telling you what you want to hear, somebody that is willing to have tough conversations, not only with you. It's not about being disgruntled. It's not about being defensive, but it's about asking you the right questions that make you think about different things, maybe things you like, things you don't like in some cases. And then ultimately having someone that has your best interest in mind. I think, I have conversations with buyers all the time when we walk into properties and they ask my opinion. And part of our conversation up front is, can I be honest with you about things? And I give them my opinion about certain things in properties. When I see properties that just need cosmetic things, that's one thing. I talk about that's easy to replace. Flooring, paint, cosmetic stuff is not a big deal. Location's important. Seeing things in property that it could potentially be bigger issues down the road are things that we talk about. And I have this agreement with my home inspector that, hey, listen, if you don't believe my client should be buying this home, then you need to tell them that. You need to be willing to say, hey, listen, this stuff is fixable. This stuff is bigger than I think you should, you should consider. It's going to cost you way more money, whatever. Have that conversation. Now, that doesn't mean that the buyer doesn't move forward, because I've seen crazier things happen.
We had that last fall, didn't your inspector, with the one with the chimney, and they did eventually. That deal didn't come together, but
he was ready to move forward.
He was ready to move forward.
He was ready to move forward after I told him I wouldn't buy that house. Fortunately, he did not buy that house, and he ended up finding something else that I believe was way more suitable and ended up being a better deal. But you need to have somebody that's willing to do that. And then ultimately, I said this to begin with, but a strong negotiator, somebody that is willing to put themselves in tough conversations so that ultimately that you got the best deal you possibly could, while not interfering in the transaction, while not being a middleman, but somebody that you can trust to help you get to the end, the end goal there. And I could go on a list of these things, Josh, but reality, if you have the basics of what we're talking about here, I think that's a really good starting place. And again, I think it all starts with a good referral, a trusted resource, in most cases, and knowing somebody that has these things to be able to guide you through the process. So takes us into, we talked about somebody that's local. I think in the market that we're headed in right now, locality is extremely important, and it's always been important, but it's becoming more and more important. You've probably heard the phrase that all real estate is local, and the reason it's local is because there's national trends out there, which quite frankly you probably shouldn't care about to some degree. You don't care if you're buying a home in Southern California, what's happening in Florida or what's happening in Texas or Louisiana. In most cases, you care what's happening in Southern California, and not even Southern California, but dial it down a little bit more. What's happening in the city you want to be in? What's happening in the neighborhoods that you want to be in? What does supply and demand look like in those markets? Because supply and demand drives everything. And without knowing what's happening, it's very difficult to not only decide whether it's the right time for you to buy a house, but also how you make offers. Should you be more aggressive than you otherwise should be? Should you be going above the asking price? What's happening with these different things? And so that's going to take you into looking at inventory. Is inventory up or down, right? For the most part, people look at the market at the moment and think, hey, it's a buyer's market. Homes are sitting on the market a little bit longer. In some areas of the country, that's accurate, right? But there's also areas of the country at the moment where demand still exceeds supply. Homes are still selling above the asking price, and multiple offers, open houses are slammed. So without knowing what's happening in your market, it's very difficult to know how you're going to approach that. And that takes us into homes sitting on the market longer than normal. That's relative, right? What time of the year is it? You got to factor seasonality into things. I mean, we haven't seen a quote unquote normal real estate market since, I don't know, it's been a while. 2018, 2019, even 2019 was a little bit weird, Josh, leading into the pandemic in 2020. So you need to know that homes are likely going to sit on the market a little bit earlier in the year. And as you move through the year, that days on the market are going to change. And then as you move back into the fall winter market, days on the market are going to pick up. So depending on the time of year that you're buying is going to dictate a lot of the things that you're looking at. And you also have to look at days sitting on the market. Are homes with days longer on the market, are they overpriced? Did something happen? Was it under contract? It fell out of contract and now it's back on the market, and that's the reason the days on the market high? Or is there something wrong with it? All of these things matter when making that decision, and that's going to take us into knowing general idea of a sales price to list ratio. So where is a home selling versus where it was initially listed? During the pandemic, homes were selling at 103, 104% of the list price in many areas of the country. A lot of the country at the moment now selling at 94, 95% of list price when homes are priced correctly. So you need to have an idea of that, because that helps you in determining how you're going to structure an offer. And then also buyer demand. We look at buyer demand in markets. If you're in a competitive market where there's a ton of buyers out there, you might have to do things a little bit differently than you would in a market where buyer demand is slow and you're the only buyer in a particular market. Right now with mortgage rates a little bit higher than they have been over the last couple of months, you've got buyer demand slowing a little bit. People want to know what the future holds. There's a lot of uncertainty. There's a lot of volatility. And so that creates chaos in the markets. And you should be, not necessarily halting everything because of it, but you need to factor that stuff in depending on where you're located, because it will help you make better decisions. You'll have more clarity. And, as the goal here with this by answering some of these questions, it helps you not only determine whether right now is the best time, but how you structure an offer to that you're comfortable with, that you're not having regrets on. And then seller concessions, right? Are sellers paying concessions? Are they paying towards closing costs? Are they paying for your agent's compensation? I will tell you that the whole agent compensation thing changed August of last year. Was it August of last year, Josh?
Yeah.
And all but maybe one transaction I've had, the sellers paid compensation to the agent. So kind of a non-issue at the moment, but without having an agent out there in the business knowing what sellers are doing or not doing, it's really hard to structure offer accordingly, because you might not be asking for these things if you don't think they're going to be paid. Whereas, hey, maybe you can get them paid. I mean, we just had one, Josh, where the seller came back to us and said, hey, we're not willing to pay your full compensation. Well, we asked the buyer, hey, what do you want to do? Would you like us to go back and try to get this? Can we negotiate strongly for this? Or would you like to try to pay it out of pocket? And they said, no, go back for it. We went back and they paid it. So it's all about knowing how to ask the right questions to get you through that process. And like I said earlier, all the information is relative. So you need to know the history, some context of what's going on in many cases, so that you can make logical decisions through the process. And Josh, it takes us into
well, let's just give a little recap right here. We talk about the 3-step educated homebuyer blueprint, and it's 3 pieces. Know your why. What are you wanting to do? Why do you want to buy a home? What is the objective? know the numbers, the numbers of what you can do, what you should do, and your budget, what you know you feel like. And then what we just went through is building your team. So that is all that foundational work. I talked about the mortgage and the numbers being foundational. This is all foundational. Really, now we've just got to the point where you can execute. So as we move from prep to execution, what does that look like, Jeb?
Well, the process is going to vary a little bit depending on where you're located, your agent, how that process looks. One thing I like to do is when working with buyers, I send out I created this high note presentation that's kind of like a PowerPoint presentation, but with videos and different things in it. And I talk each stage of the process, they get one of these emails, and it kind of walks them through these steps in detail that says, hey, listen, you've been pre-approved. You're starting to look at homes. This is kind of what it looks like. And it goes through this process. Your offer gets accepted. Now you get another one. This is what it looks like. And so there's some clarity in that process, but kind of an overview. If we're talking about here, you found your A team. We talked about how to do that. The next thing after doing that, because again, we didn't put getting pre-approved in here because you've done that first, right? That was the first step. You've now hired your agent. The next thing you're going to do is start house hunting. Many of you are probably already looking at houses, if I'm being honest. You're probably on Zillow, probably on Redfin. You might even have a drip coming from a real estate agent and you're looking at property. And honestly, you should be. The more homes you see, the better you're going to get at pinpointing what's important to you in a home. So I think you should look at as many homes as possible online. The ones that you like the most, you should be scheduling some time to see with your agent, going to open houses.
And that's not just helpful, Jeb, to the agent. That's helpful to me. The people who haven't even cracked open Zillow or Redfin and have no idea are often the ones that they're shocked to find that they're qualified for 400,000 and homes in their area are 800,000. The people who have gone through and they go, these are the cities, these are the neighborhoods I want to live in, and this is kind of what homes cost there. Those are the ones we're going to have a more successful outcome. So I don't think it's a bad thing. It's not necessarily jumping the gun. It's educating yourself on where you even need to be.
No, absolutely. And you should be saving those properties, even the ones that you saw previously that have closed, because that gives your agent a better idea of what it is you're looking for in a home, and they can guide you through that process. Now, a lot of people think they're hiring an agent to find them a home. I would say, I would argue that fact. Yes, part of our job is to help you find a home, but more importantly, our job is once you find that home, to help you decide whether or not that is the right home by doing the inspection, by walking through, repairs and part of the process. But ultimately, our job is once you find the home, that's when our job starts. We're ultimately, going through that process and negotiating and ultimately helping you get to the finish line with that. But overview here, you're house hunting, you're making offers, typically more than one. People are shocked when their first offer doesn't get accepted. And I will say that better things come, right? I mean, I've never seen a buyer miss out on a property and not find something that was better or suited them better in the future. So I believe things do happen for a reason. But as a home buyer, a lot of times you're making more than one offer. At some point, your offer is going to get accepted. And that's really where the process begins, with Josh and I in real communication, working together to get to the finish line. And so with that, Josh, that's going to take us into what this looks like. So opening escrow. What does opening escrow mean? Escrow is essentially a third-party company. In some areas of the country, you're dealing with an attorney, but escrow is basically an intermediary between all parties. They don't work for one specific party. They're there to facilitate everyone working together. Escrow is open by paying that earnest money deposit. Once that process starts, my recommendation as an agent is one of the very first things you should do is get your home inspection scheduled. In my experience, more deals fall apart over inspections than anything else in the process. More so than appraisals, more so than because your loan has been approved by Josh. He's done his job. We know your loan is solid. Seller disclosures, that sort of thing. Typically, we already have any sort of disclosure on the property. So the inspection is the one thing that could make the deal fall apart. So we're doing that early.
You froze on me there,
Oh,
Jeb.
I did. So loan disclosures, what does that mean for you?
This is a really important one because people get confused by this. Like, what the heck is this? What do you mean disclosures? Really, the most important thing in there is the loan estimate. So that is the official estimate of what closing costs are going to be. As part of opening escrow, all those two contracts that came in this morning, we reach out to the escrow company and say, hey, I need third-party fees. Sometimes that's title that handles the closing. Sometimes it's a separate escrow company, but they send us over those third-party fees because we as the lender are held accountable for it. So we are getting you an accurate loan estimate. That is an important document. Sometimes when we have a flaky title or escrow company, they don't get us those fees and we have to over disclose. But it shocks me how often I hear from someone that their loan officer told them, well, just ignore it. We just have to get you those disclosures so we can move forward. Those should be accurate. If I can't get accurate third-party figures and we're using blanket high figures for you, we're going to let you know that, but it should be pretty rare. That loan estimate sets the tolerances for how much things can change at closing and really sets in stone, is my loan locked? What's my payment? What's my total cash to close? And it should look real similar to what I gave you before. The second part of that, until we've made those disclosures, need that before we can order the appraisal. The thing I like to tell you about ordering the appraisal, much like the home inspection, the appraisal inspection, they want to be paid at time of service. They don't want to wait 21, 30 days till closing. So that's the only thing from the loan side that you will pay prior to closing. We're generally going to send you a link. You're going to go on, pay with the credit card so that that can get scheduled and done. And when that comes back, appraisal, hopefully it comes in at value. Jeb, you and I got one back this morning. It came in $3,000 over value, over the sale price, and as is, meaning there were no repairs. But sometimes there can be repairs to be negotiated there. Sometimes that inspection can be negotiated or cause issues that need to be negotiated. So what do those additional negotiations look like, Jeb?
Well, I mean, most people think once they've settled on a price of a home that negotiation's over. That's the first negotiation. Just getting your offer accepted is negotiation number one. The additional negotiations come up when the home inspection comes back and you have concerns with things that need to be fixed, or you want a credit for something. Sometimes the appraisal comes in less than value. It does happen occasionally, and you need to now either renegotiate a lower price or renegotiate something so that you actually still have a binding contract there to move forward. So additional negotiations could be a number of things that come up during the process, but it's really geared, in my opinion, around the home inspection, around the appraisal. So that's going to happen after those come back. And then that's going to take us into part of the, all of these things are happening simultaneously, by the way. I think, because they're in order, it makes it think that, hey, you're not starting this
it's a
until
rough one.
This happens. These things are all kind of happening simultaneously, but, and there's some overlap here, but in theory, this is kind of how the process moves along. So, Josh, what does conditional loan approval mean? I thought I've already been approved.
You have been fully pre-approved by me. Conditional loan approval for us just means it has gone in front of the underwriter. They're reviewing some things that we didn't have access to initially: the preliminary title report, the escrow instructions, the purchase agreement. On that initial underwrite, we may not have the appraisal back. An appraisal can take 5 to 10 days, sometimes a little longer depending on where you are around the country. So that is all going to get reviewed. So there's going to be conditions there. Maybe they want an updated pay stub. Maybe they want a bank statement. Maybe they want an explanation for something on your credit or a deposit in your bank account. There's always going to be things there. But for us, this is generally just connecting the dots. Having that loan approval, having your homeowner's insurance and an appraised value, that allows us to get your closing disclosure out. And sometimes people get this and they go, well, wait, are these my absolute final figures? Is this the absolute amount? And what we tell them is a preliminary CD. By getting that out to you and you signing that, there's a waiting period. You can't sign your final closing docs. You cannot have closing until 3 days after that. So we want to get that out as early as possible. You're going to get another closing disclosure before you sign your loan docs that we're going to review. And that one is going to be collaborated with title, verifying all third-party fees, verifying all of the prepaid items, everything that's due, and that's going to be dialed in. But we're going to get that closing disclosure out to you. We're going to be gathering that conditional loan approval. We're going to be clearing those loan conditions, those 2, 3, 4 items that we needed. We're going to get them from you. We're going to get them from third parties. We're going to get them back in front of the lender, and we're going to get the clear to close. So Jeb, again, these things being somewhat out of order, clear to close is the last one there. Release loan contingencies is 9. Why do we have release contingencies, including the loan contingency, ahead of the clear to close, which is essentially unconditional loan approval, all conditions having been cleared?
Well, I think that you could jump on that, Josh. But I mean, in theory, what happens is you've got, depending on which state you're in, depending on how the process works, right? Some states don't require you to release the loan contingency until the very end of the process, where other states like California, it's 17 days per how the contract's written. So you've essentially got 6 or 7 different contingencies depending on what you're looking at. But you've got an appraisal contingency, loan contingency, home inspection contingency, seller disclosures. You're looking at title report. You get the title report. You get to look at HOA docs if there's an HOA. Sometimes there's a contingency for a seller or a buyer to sell something or buy something before. So all of those contingencies need to be released per the contract in order to keep the process moving forward. Now, one thing about the loan approval is oftentimes you don't have that clear to close by the time it's ready to release contingencies. That's completely normal. You're just going off the fact that Josh has gotten your loan approved with the bank. He's met the conditions or knows that he can clear those conditions, and he's given you the authority, me, the clarity and comfortability that we can release contingencies. I've been doing this 20 plus years, 22 years to be exact, and I've never had a buyer lose a deposit. I don't ever plan on that happening because I do the due diligence to make sure that the buyer is ready to move forward. We've done everything we need to do so that we're not releasing contingencies earlier. And part of that, again, goes back to that communication, having that conversation back and forth. And then the next thing, Josh, is you're exercising patience. I think people believe because they're buying a home, oftentimes it's a 30-day process, that they need to be doing something every single day of the process. And the reality is that's not true. I would say if you took full time of buying a house for a buyer, what are you doing to actually get through this process? Probably all the hours, probably a day, right? I mean, it's broken into 10 minutes here, 15 minutes here, maybe an hour and a half here at a home inspection, that sort of thing. But it's not every single day you're going to be doing something to get this moving along. A lot of it's happening behind the scenes with Josh and myself, title and escrow and everything, just moving that process along. But once we've got that clear to close, that takes us into what that process looks like now. So we, if we negotiated repairs, if we did not negotiate repairs, we still need to do a final walkthrough through that property. Ideally, it's after staging has been removed. Ideally, it's after the seller has moved out to some degree. Now, that doesn't always happen because sometimes the seller's waiting to move once it closes. So we're just the final walkthrough is more so checking to make sure any repairs that we requested were done, but also make sure that the property's in the same condition it was when we originally wrote the offer, right? We don't want to see new issues. We don't want to see holes in walls that weren't there, anything like that. So it's just a validity check, if you will.
Or repairs that you
Sure.
had asked, if there's a hole in the roof and you say, hey, I don't want a hole in the roof, they should have fixed that by then. We had one in Ohio, two weeks ago, and we have to close on Monday. This has to close on Monday. It can't close a day later. Sunday, they do the walkthrough and none of the repairs were done. So we closed on Tuesday and it was fine, but everyone was telling me it has to close on Monday. Don't let this not close on Monday. We roll in on Monday, ready to close the thing. And they're like, yeah, no.
So the next thing you're going to do after that final walkthrough, Josh, is you're signing loan documents, right? So that's typically going to be done either at an escrow company, at an attorney's office, or you have a notary coming to you. You're doing it at your house. And keys are handed over at that time. Each state works a little bit differently, but once those loan docs are signed, you're given a document that says how much money you need to wire in to close that transaction. Now, keep in mind, you've already paid some of that money through your earnest money deposit, so that's factored in, but you're paying the remaining balance there, Josh. Anything you want to add to that?
What I want to add to this is, depending on where you are in the country, this is going to look a little bit different. Yeah. Primarily, we have 2 types of states: wet funding states and dry funding states. So we showed Becca at the top of the show. She's in Maryland. That is a wet funding state. So the loan documents go out. She went into title. She signed. She had already wired over her funds that morning. and it was released for recording, and it recorded, and she was handed her keys as she walked out the door. Now, if we were in California, what likely happened is we sent the docs over 4 days before closing. We review everything with her. She wires her money over. They send a mobile notary out to her to sign. The docs then come back to the escrow or title company, who scans us a copy. And then on funding day, everyone goes, hey, are we all ready? And then we wire funds to title, and they later release that for recording. So it's something that, again, this is why you need to have a team. I was struck on the last slide, Jeb, you were going through this, and I go, it always makes me chuckle that everyone said that the settlement there was going to be the end of realtors, because we all have Zillow and Redfin. We can find the houses ourselves. Realtors don't do anything. And when you hear all of the things that have to be managed through the process, including emotions and expectations for buyers and sellers, it's a difficult job. And if you have the right team, this is going to be really easy and stress-free. If you have the wrong team that hasn't prepared you, hasn't walked you through it, and isn't a resource for you to ask and get accurate answers to any questions you have, it can be stressful. But that's what that final process, that home stretch, looks like before you get your keys to the property. So then from there, Jeb, once they get their keys, what's the most important thing they're supposed to do?
They're going to take a photo and they're going to send it to us. We're going to put you on the next series of the Educated Homebuyer Blueprint. You're going to leave us a 5-star Google review, and you're going to be Jim and Cheryl. We're going to use you as our next example. But with that, Josh, let's talk about some homeownership myths that people need to understand. These are often misunderstood, and I think something that's really, really important.
So people think I need 20% down. Anytime you look at a survey of potential home buyers, this is the number one thing that gets cited. 50-60% of people think you need a 20% down payment. So currently, I pulled up the numbers for a first-time buyer in the U.S., the median, so half above, half below, is a 9% down payment. I can tell you that's high, but for me, it gets skewed high. I have people, had a borrower, bought a $700,000 home. Her dad gave her a $250,000 gift. So that was 35% down payment. Most of my buyers, we're looking at that 3% down conventional, 5% down conventional, 3.5% down FHA. And I do a lot of VA business as well, which is 0 down. So USDA is another 0 down option if you're in a USDA rural area and you meet the income limits. So all of those are options, and all of those, the only thing you have to come up with is your down payment. Seller, lender credits, and other sources can come up with all of the rest of the money. So when we look at it, there are options well below 20% down. And for the most part, people say, well, then there's mortgage insurance, and that's stupid and it costs so much money. People are generally shocked when they see how reasonable mortgage insurance is, especially for those with high credit scores. You have a husband and wife and they're both over 750 and they're putting 5% down, it's going to be a really, really low number. So that myth is one that I really think needs to be put to bed, because most first-time buyers are able to get in reasonably and affordably without doing that. The other one that we hear all the time, Jeb, is you have to have perfect credit. Well, what does perfect credit mean? We talked about at the top of the show. It's kind of a report card for how you're handling your finances in general. So I want to see that as high as possible, because it saves you so much money through that process, both in mortgage insurance, in the actual rate, in your homeowner's insurance can be less based off of your credit scores. So those things are all important there in terms of what you should be looking at. But the last one, Jeb, here is, we hear this a lot, that the market is too expensive. It's more of a real estate question. But I always answer expensive relative to what? Too expensive implies that it is going to be cheaper in the near term future, and there's something better to wait for. How do you go through this when you're talking to buyers?
Again, I don't know that there's an easy way, Josh. It's relative. It is relative to what you believe is you're comparing it to, and where you think values are going to be in the future. I think it's often important to understand context, right? Understand trends and what's happened historically. Home prices have appreciated about 4.6% on average for the last 65 or so years. We've only had one real estate crash, and it was actually caused by real estate. And so, we're not in that market. The reality is, home prices traditionally go up with at least the rate of inflation. And so if you believe inflation is going to stay at 2 to 3%, then you have to believe that home prices are going to kind of stay in that same same trend. But at the same time, you have to understand supply and demand. We talked about that at the beginning of the show. If you're in a market at the moment that has a ton of supply on the market, no one's buying homes, that's cause for concern. That's cause for pause. That's a reason to take a step back and look at the market and determine what's right for you. But what I will say is buying a home isn't about trying to pick the top or the bottom in the market, the perfect time. It's about, buying for the right reasons, having time on your side, and then looking back in 10 to 15 years and going, holy cow, look what happened. I mean, I tell stories all the time about sellers that I meet and sit down with and talk to at open houses or whatever, and they bought their home for 35 grand or 50 grand, and now it's worth 1.5 million or 2 million bucks. And they go, I cannot believe it. I had I known this, I would have bought 10 of these. And I'm like, yeah, that's no one ever regrets buying property. They always regret selling it. And so what I can tell you is don't get focused on, the numbers. Don't get focused on the Zillow. Get focused on whether or not you can afford it, whether it's the right time for you, having money in the bank, having time on your side. That to me is what's important.
Yeah, agreed. So to recap everything that we've gone through here, clarify your goals, what you want, where you want to go, where you want to get, and your readiness. So there's nothing wrong with having goals that exceed your grasp today, but know what those goals are, know where you're at today, and now you can start to work on closing that gap if today is not the right time for you. Know your numbers, know what you're capable of doing today, know if something's going to change in the future. You're going to get married and become dual income. You have a big inheritance and you're going to go from a 3% down to a 30% down. Know your numbers, know what that looks like, and build your A-team. Again, Jeb and I are not here to tell you that we're the only two people in the world that can help you on the real estate and the mortgage side, but it's an 80-20 industry on both sides, on mortgage and real estate, and it's really 80-20 of 80-20. So meaning that you want the top 20% of the top 20%, the top 4 or 5% person on your side, and that's skills, knowledge, ability, experience, and some of that beauty is in the eye of the beholder. So you got to talk to a few people and figure that out.
Sure.
If you're not comfortable with making that decision based off of what we've gone through tonight. So to help you with that, we have some additional bonuses for you. So it's a mortgage consultation, real estate consultation, either side. You can talk to Jeb, you can talk to myself if you want to go through the mortgage stuff. But for anyone that does that and schedules that, we have a discount package. So free appraisal for anyone who gets pre-approved as part of showing up, watching this. And the reason why we do that is the folks who come to these webinars and educate themselves, the ones that listen to 60 episodes of the podcast, those are the best and easiest clients for us. They've already answered many of their own questions, or I guess Jeb and I have already answered many of their questions, but they went and got that information themselves. If we connect you with the realtor, if Jeb helps you locally, if he connects you with one of his expert realtors throughout the country, we can get you a credit of up to 10% of their agent compensation to, again, help reduce your cost there. And those agents are happy to do that because, again, they're getting an educated home buyer coming in who has a much better handle on what that process
Well, Josh, going
like.
back to that, like we have one getting ready, we're negotiating the final stuff right now, and they're going to get 10% of the commission, right? Which in this case is probably $1,200 to $1,500 that they're going to get, that they can do whatever they want to with. So
it's not nothing, right?
No.
It is real. It is real money. So if you have $10,000 of closing costs, and you get a couple $1,000 credit towards it. It definitely reduces what you're looking. You all know this gentleman here. Most everyone knows this gentleman, Tony Robbins. One of my favorite sayings of his is LODI, the law of diminishing intent, which just simply says the longer you wait to do something that you say you intend to do, the less likely you are to do it. So even if you're not going to buy a house next month, like we talked about, we have 4 people from the show in the webinar in January that have closed now, but that's 100 days. So if you're not going to buy in the next 100 days, you're going to buy in the next 6 months, if you're going to buy in the next year, never too early to start educating yourself and pulling this information together. One of those folks who showed up in January, I had actually talked to them a year prior, and they told me we're a year out, but we want to make sure that with our job promotions, with us getting married, with this is how much we can save over the next 12 months, what can we do? Sure enough, they came back 12 months later and we got them into a property. So how do you get started? Schedule your consultation in the next 24 hours. complete your pre-approval. Look at this, Jeb. I have it there, February 4th. They're not going to be able to complete their pre-approval by February 4th. So let's look at, how about April 29th? Let's make it April 30th. So by the end of the month, if we complete your pre-approval, you are eligible for all of those bonuses. So simple. You can go out to the podcast website, theeducatedhomebuyer.com/apply. That is going to take you directly to my online application. You're going to notice that's moving us ahead in the process, because largely you have done, by being here tonight, much of the legwork of knowing what that initial conversation would look like, what we're going to need from you. So when I get that application, we're not going to pull your credit until you and I have a conversation. But with that, we kind of have a roadmap to you, your situation, your finances, and we're going to have a better conversation. And from that conversation, I'll then follow up with, here's the documentation that I need, pay stubs, W-2s, tax return, whatever is there. And we are off to the races in terms of a rock solid pre-approval. And again, you may say, hey, I'm not going to buy for 9 months. We may not pull the credit at all. We may do a soft credit pull, a single bureau, just to get a look at it. But we're going to be able to figure out exactly where you are today and what makes sense for you.
Yeah, good stuff, Josh. And lastly, with Jim and Cheryl, once again, just a little quote. I think it's important here. Says, once you get an offer accepted, it's a whirlwind, but my wife and I felt confident and informed every step of the way. My advice is to get as educated as you can and find experienced, reliable people to support you. Our agent and lender were instrumental in getting us to the finish line. My wife and I are absolutely stoked to be in our first home. So if you want to become Jim and Cheryl, raise your hand, jump into the process. You can do that by going to that link below there, theeducatedhomebuyer.com/apply, and get in touch with us.
If today's episode gave you clarity, direction, or even just a little more confidence, that's exactly why Jeb and I do this. Now, if you're feeling ready to take the next step, whether it's 3, 6 months, or just 30 days away, here's our best advice. Don't wait to get pre-approved. That single step unlocks your budget, your timeline, and your entire home buying plan. And if you want help, real guidance from someone who does this every day, you can schedule a one-on-one consult with me and the team right now. Just head over to theeducatedhomebuyer.com/blueprint, answer a few quick questions, and we'll get you help to get you pre-approved, connected to the right local team, and moving in the right direction. Because the goal here isn't just to buy a house, it's to become the educated home buyer.
And lastly, if you found any value in tonight's episode, make sure you hit that thumbs up. Share it with somebody who might be going through the home buying process so they can also become educated home buyers. If you're not following us, you can do so by hitting that subscribe button. Finally, we appreciate you being here. We appreciate the continued support. Until next time, make sure you buy right, borrow smart, and build wealth. Adios.
Amigos.